when you get a rally and a pullback, when you hit the 618 level, you usually are going to go up and hit that 100% level. And we've done that. So I believe this is like, if you're not in miners, I believe we're going to see maybe a pause or pullback here, which can be an opportunity for the next leg up. But it's also our early warning sign saying, okay, miners are now leading the way, which is good. Gold should follow and break out any day. I mean, I used to watch it and used to really just trade gold and miners back in the day. Usually there's like a 4 to 7 day delay where miners break out in this particular situation and then gold moves. So it's kind of that early warning. Like miners actually tell us and get us ready for a move in physical gold, which you can trade with leverage ETFs or just physical, buy physical for the next move up. You can do whatever you want. So, miners right now, I believe they've had that first impulse move. I think they might pause a bit. And now the focus is on gold for its first move and breakout. And silver will probably follow suit, maybe a little bit after gold. Silver's got a bit of a noisier chart to build out and break out for. No, I don't know if I have the seasonality chart up right now, but let me pull up this the physical. This is an interesting chart on gold. So let's just pull up. Let's see here. If we look at the Sprott physical gold fund, and it's the same with other physical gold funds. So gold has had this beautiful chart pattern where it rallies, it pauses, it rallies, series of bull flags. We're in this massive, I think, final bull flag where we're going to see gold go to about 4,100, if not blow through that and go a whole lot higher. When we look at the futures chart of gold, and I noticed you had this chart on your article just a second ago, which is the regular trading hours ETF. But if we look at gold hit on the futures chart new all-time highs today. It still has a bunch of, it's got some of these other highs. It's hitting all-time highs. But when you look at gold from a regular trading hour standpoint, when we look at where gold trades between 9:30 in the morning and 4 o'clock, we're not trading at all-time highs yet. And so I like gold. I'm getting ready to get long gold for a trade. And I'm actually waiting for a breakout. I actually want to wait for this to break and close above there. And that will be my signal that, okay, it is officially broken out and we're going to see a big move up. So you had this chart on your article just showing like during regular trading hours, we keep bumping our head on this, like, is a double top, a triple top, quadruple top. Like, how many times is it going to hit this before it like breaks through this level? And we're getting very close, I think, to a breakout, and then we're going to see a huge run, which will drag miners up. It'll drag silver up. We're definitely going to see a big push and a run to the precious metals space.
Yeah.
In futures trading, gold has pierced new AT8s, yet in regular U.S. market hours, 9:30 a.m. to 4 p.m. it's still pressing against a stubborn ceiling. Price structures show repeated double, triple, and even quadruple tops, levels acting like a vault waiting to be breached. A sustained close above these barriers would confirm the breakout. Traders positioning themselves now are watching closely. Once gold escapes this technical chokehold, movement could accelerate rapidly, pulling mining equities and silver upward in its wake. The divergence between futures strength and normal hours congestion adds tension and promise.
I mean, it's piercing through this level. We're playing some serious catch up. We're seeing a run. Miners. I'm going to drop back to the daily chart because if we zoom in on the shorter term price action, what I find really interesting are gold miners have broken out. So have silver miners. And when we're in a ideal precious metals market, which we are now, I believe, for the next month or two, potentially a little longer, miners usually lead the way. And so they usually give you an early warning. I remember back in late 2008, early 2009, gold miners will pop and take off and run and make big moves. And then a few days later, gold starts its move. And so the savvy money, the aggressive money, the people who are front running, who know we're in a precious metals environment, they say, well, get me into the more leverage play so that, because I believe gold's going to move. So I want to own gold miners. And so that's what we've seen here. We've seen it already break out. People are moving into the miners. And when we look at an overall target, I think it's kind of interesting. We had this very significant low with a high volume rally. And then we had this first pullback. And, if we look at GDX right now, and this is the same with the GDXJ and silver miners, they've pretty much hit their 100% measured move based on this pattern. And generally,
Gold miners often foreshadow moves in bullion, and that scenario seems to be unfolding. Mining equities have already broken upward, signaling the early stages of broader precious metals strength. History shows that in environments like late 2008, miners jump first and bullion follows days later. In 2025, miners have surged. Gold itself is up roughly 25 to 30% year to date, but major mining indexes are outpacing it, GDX rising over 50% YTD Sprott. That early breakout isn't just a hint, it's a clarion call. Even if miners pause briefly, gold could be next to spark the explosive advance.
When you get a rally and a pullback, when you hit the 618 level, you usually are going to go up and hit that 100% level. And we've done that. So I believe this is like, if you're not in miners, I believe we're going to see maybe a pause or pullback here, which can be an opportunity for the next leg up. But it's also our early warning sign saying, okay, miners are now leading the way, which is good. Gold should follow and break out any day. I mean, I used to watch it and used to really just trade gold and miners back in the day. Usually there's like a 4 to 7 day delay where miners break out in this particular situation and then gold moves. So it's kind of that early warning. Like miners actually tell us and get us ready for a move in physical gold, which you can trade with leverage ETFs or just physical, buy physical for the next move up. You can do whatever you want. So, miners right now, I believe they've had that first impulse move. I think they might pause a bit. And now the focus is on gold for its first move and breakout. And silver will probably follow suit, maybe a little bit after gold. Silver's got a bit of a noisier chart to build out and break out first.
Chart analysts use measured move techniques to estimate price potential. A recent example, adding the height of a bull flag to its breakout point suggests targets near $3,735, about 10% above recent highs. On a bigger scale, major institutions forecast further upside. JPMorgan expects average gold around $3,675 by end 2025 and reaching $4,000 by mid-2026. Goldman Sachs is even more bullish, projecting gold may surpass $4,800 by mid-2026 under recession risk scenarios. This pattern-based optimism aligns with macro forecasts rooted in uncertainty.
All right. So the big question is where do we pull the levels from? And that's one of the difficult things with miners and even silver is they have very noisy charts. So we'll have to like fish around and this is where it's like comes into like it's experience and then it's also art. You kind of have to figure out what looks and feels right.
Yeah.
So I mean, we could go off a couple of things. We could go off this spike low that we had in COVID. We could have this run up as the first move. And it came all the way back down here. And then we carry that forward. So it says more or less we've hit that 100% measured move. So that's kind of, that's a pretty big chart pattern that's been drawn. Now we could pick another one. I usually like to start with the start of a leg. I would say this one here to this high and this pullback. It also carries forward, which also happens to be the same one, which is why we probably traded sideways here for 4 months. It's 2 resistance levels, 2 different patterns running out of momentum. Not only that, as you just mentioned, Craig, it's the tops of these shoulders from a decade plus ago. So there's overhead resistance of people who suffered all of this, and then they finally get back to break even. They're like, just get me out. Yeah. So that's a lot of people getting out or, just overhead resistance. I think we almost need the weekly chart to actually find something because there's a lot of wicks in here. Let's drop to the weekly chart and see if we can get another pattern. I'll just clean this up a bit.
Beyond charts, powerful macro forces underpin gold's rally. Central banks across Asia and emerging markets continue accumulating bullion as a hedge against uncertainty. Demand from ETFs remains robust, fueling upward pressure. UBS sees gold hitting $3,600 by March 2026 and $3,700 by mid-2026, noting rising ETF demand and central bank inflows. RBC Capital Markets, while recognizing gold may be overvalued on traditional metrics, argues that investor psychology and safe haven demand could push prices to $3,022 by late 2025 and $3,830 by end 2026. The combination of technical setups and macro tailwinds forms a compelling investment narrative.
The weekly chart, where could we go from here? I would say this is a significant standout low.
Yeah.
I would say this is a standout high. And then I would say this is a low here. We could carry that forward. And for GDX, that puts it up to 64.
Which is that old head.
And I don't know where that falls in the past, but let's draw a line on it and drop back to the monthly chart.
That's the head from 2011.
There we go. So,
all right, do the big daddy. Go from that high in 2011 to the low in late 2015. And where does that project out?
Sorry, say that again. From where to where?
From that high in 2011 down to the low in 2015. And if you carry that forward, what are the numbers?
Oh, you're talking more or less taking the height of this?
Yeah.
Okay, yeah. Okay, so if we stack that on top, that is a pretty juicy move. I remember a long time ago, my projection like this is something like $125, $140 for silver. So yeah, if we were to break this, it goes ballistic. We might actually see that, well, this isn't silver. I was going to say if this is silver, we might get that giant short squeeze.
Gold's momentum is rooted in both chart structure and macro narrative. ETFs have returned up to 40% over the past year amid all-time price highs. Analysts advise aligning any investment moves with long-term goals, risk appetite, and macro outlook rather than chasing breakouts blindly. Should gold break that final bull flag resistance, we may see a strong leg upward. Miners already leading, bullion following. Yet even now, positioning ahead of that confirmation could be a strategic advantage. The space is poised, dynamic, and full of potential.
It's been a painful ride. It has so much hope, and then it crushes your dreams. It gets you all riled up, crushes your dreams.
Right.
So obviously it's tapping on the door to break out. And, there's never been a better time for precious metals. It feels like every year it's a better case for precious metals and miners to rally. And I think we're actually at that scenario where things are about to really break out and go ballistic. So obviously we could see this have a very big move. It's stuck at resistance. And we'll just have to see how that unfolds. I don't know where we would draw anything on there to get the upside projection. I mean, just based on this low and this high and this low, it's really going to run right into, this 100% measured move isn't a whole lot higher. So that's why I like gold, believe it or not, because maybe miners have already played their catch-up move. Technically, maybe they have. And then when we go and we look at the chart of gold itself, gold has got this massive high momentum pattern that points to $4,100, potentially a whole lot higher. I have to stretch this out, and obviously drop down to a weekly just for a better view. But to me, I think gold has got this really nice chart pattern. Mm-hmm. As much as people want to be in miners, gold is pointing to like this 4,100 bull flag pattern that everything else has already popped and moved, and a lot of investors have moved into those. Now I think everybody's going to be ready to move into the physical and drive it higher. And I also think we're very close to potentially a big market sell-off. I think the markets are getting dragged up by the Magnificent Seven, and we're close to, I think, probably some bad news, which is probably why gold is holding up. I like gold. I like miners have some explosive potential. But right now, if you had to pick one, which one is to move next? I feel like it's actually going to be gold.
Yeah,
and
sure looks like it.
20% upside, and I like gold because it's stable. It's not quite as volatile and can't give the gains back as quickly. But the whole space is locked and loaded. It's already moving, and gold is on the verge of the next major leg up.